All right, we're gonna dive right into this new system we got in place. It's not recommended time to trade, but we still gonna take trades and go through the system. So you notice we changed the Bollinger Bands to these trend lines. That way you can know when it's in a trend. Here we go, pre-signal alert. So we set up for the pre-signal alert, which is the GBP USD. Make sure we in one touch, 60 seconds. GBP USD put, set up. Now look down here. We would at this point we will be coming in if we are 20 seconds within 20 seconds of the candle after you saw this pre-signal, or if it's the current candle but it's not already past 20 seconds. So basically, let's say right now you got an entry alert to go in, you would not take the trade. You will wait to the next candle, and if you get an entry alert, then you would take the trade, and it has to be within 20 seconds. So now we will be paying attention to see if it will come. We're also only taking trades. As you see, we're counting down right here. If this goes past 20 seconds before you see a white arrow, then it's a no trade. And then you wait for the next signal. Another pre-signal alert. So it lets me know it's strong. You see we have a triangle here. These are indicators. If you get a triangle and it stays, then that's a strong indicator. If you get more than one, it's even stronger. Like that, or get 3 or 4, it's even stronger. So you want to have at least one present. The other rule is you want to touch these magenta lines. So when price touches the magenta line, and if it shows you a signal, then the signal is good to take. If it's in between, like let's say it was here, then it's not. Like right now, this is ready. Pre-signal AUD, JPY. We're going to get ready because we got one for the AUD and for the GBP. So we'll just get ready for both. We already set up for the GBP, so we'll keep that. And then the AUD, we'll just be aware. So it's already past 21 seconds for both. So it's a no trade, and we'll wait till the next signal. Just like the old system, for those that was aware, we still, once we get a pre-signal like that, we still keep an eye out because chances is it's going to come back. It's just the fact that the price moved. But see, price always retraces and comes back. It goes up, it goes down. It never stays in one place. So knowing that, it's a good chance that signal could still be valid. So we always look out for it. Another important thing that we're looking for, like I was saying before that pre-signal came, was we're looking for the price to be within these magenta lines. Like, see how this price closed? This would be a good trade. This wouldn't be so much of a good trade. So looking at the two that came, I would evaluate which signal was more of a high probability. By this one crossing past the magenta lines, I would have went for this one versus this one. Now, with that being said, this market is not meant to be traded. I mean, these signals are not meant to be traded in a flat market. So that's also why we changed the bands. That way you can see clearly that this is a flat market. It's a little bit tilted, so it's a little bit down, but this is clearly in a downtrend. This is clearly in an uptrend. This is clearly in a downtrend. This is more of flat, more straightforward, and these ones we kind of stay away from. Less likely, not as high probability as these. These are more higher probabilities. So you're looking for the trend. You're looking to go to the opposite direction, because if you notice, every time it hits the band, it goes in the opposite direction. Every time. Even if you didn't get a signal, you still see it goes in the opposite direction. So once you get a signal, you already know. The only time you can break this rule is when you're over here touching this, or touching that. And then that's when you're going to go you're going to go in the opposite direction. As soon as you touch this red band, you go in the opposite direction. We got a pre-signal alert for the Euro USD. And this one's following all the rules. See, past the magenta line. It got a red triangle present, and we're well before the 20 seconds. So if the next candle comes and we get an entry signal, which is a high probability we will, so I'm going to set up. There it is. Take the trade. This is why, now I'm going to show you why we don't wait till 20 seconds. Look at this right here, and look over here. See the big move? Now it happened at 15, happened at 17, 19, 20. So the quicker you get in, the better your position is going to be. Chances is right now at 25 or 20 something, it's gonna do another move, because a lot of times by the time it hits up to 30, a lot of times it'll do another jump, and then that's the reason. Well, it's two reasons why you don't want to get in. One of the reasons is it could do a move around this time, and then you'll be out. Like let's say you did that, or you get you don't want to get a bad strike rate. You know, you're gonna get a bad strike rate, like you might be in right here versus being in way up here. You know, and what's more important though is you see how this is about to close out. See how I just jumped up, but we still got 8 seconds, 7. So it was fine. I had to jump up so much that we're still in the money. Well, look what happens after, because we're going to win this trade. So we're going to win this. See, 34. Now I want you to look over here. Now, look at this. You would have still been in this trade right now. And look, the price is rising. So if you would have still been committed, excuse me, we're in the wrong one. Right here, we're over here. So, you know, Euro USD, you see the very next candle was a green candle, and we already ended right here. So that could have very well put you outside the money, and it would have been you being in that candle too late. So by you being in this candle late, it's going to put you into the next candle late. So it's a couple of different reasons why you don't want to take the trade after 20 seconds. Now, it's an exception to the rule. Sometimes you can see, like I said, you're deep up here in this red area, and maybe it was that the candle came at 22, 23, maybe even 25. I would probably still take that trade. I'm not going to lie. I would take that trade because it's still a very, very high probability. As you can see, if it goes anything even remotely touches the red, more times than not, 80% of the time, maybe even 90, it goes in the opposite direction. So you can see. And same thing for the magenta to a certain degree. You know, like I said, when it touches this, it's going to go in the opposite direction. Now, what you want to do, I know for the 5 minutes, I'm gonna speak on the 5 minutes because I know that they go hand in hand with the chart. So when they do go, just so you have already a heads up, the way the 5 minute works is you actually follow the trend. So you will only take signals that's going with the trend. See how this is going down? So that's all you would be taking. You'd be taking puts. Here you'd be taking calls. So even if you got a call signal, you wouldn't take that trade. You would only take puts. The only time that you break this rule is when you hit the oversold or oversold or overbought. And that's these lines up here. And once you cross those lines, then you go in the opposite direction. So if you come up here, you're going down. If you come down here, you're going up. Okay, that's the only time you break that rule. Other than that, 5 minutes is going with the trend. It's always going with the trend. Pre-signal alert, USD, JPY. Take one more. 10 seconds. So if it comes anytime soon, we're going to take it. We got nice confirmations deep over here within the red. We got the triangle. So I'm happy with that. That's what it's all about, trying to take high probability trades and situations. Okay. Now, this is one of the situations where I said I might be still tempted to take this if it came late, but this is a little too late for me. But if it would have came, see, like this, let me show you. See that? Two triangles, and it's made a line. Then you got two indications that it's going up. Plus, it's under. It started off by the red. Now it's by the magenta. I'm very comfortable with that. Look at this. AUD JPY. Both of these are good situations. Both of these are good trades. I'm going to get ready so I have a good entry point because I know more than likely one of these is probably going to present itself. So let me get ready. So I have my finger on the trigger over here in case it's AUD JPY. I'm already ready to go. Okay, no AUD, no JPY. So, but I'm still going to look for the next candle because it's a high probability chance that it'll come back. Now let's look at this. When we was talking about this, this is a trade that I wouldn't take. See, because it's in the middle and it's nowhere near these these magenta lines. So I wouldn't take that trade. I wouldn't even be looking at that trade. That's the difference in high probability, low probability. So we're still looking at the USD JPY as well as the AUD JPY. See, remember I told you they come back? Yeah, this USD want to do something. So I'm really looking at this. Look at another triangle. So another confirmation. So it's getting stronger and stronger by the minute. It's about to be too late though. It's 21 right there, 20 seconds. So now I'll be looking for the next candle. But that next candle is going to be a strong one at the rate it's going. Still looking at the USD JPY. We had 38 seconds, so we're not taking anything to the next candle. We're just patiently waiting. We like this in the uptrend. We got triangles presenting themselves. Everything it's under the magenta line, even going close to the over board line. So we're happy. We're about to get ready. Here it goes again. Now we got a triangle, another one. So now it's three triangles. So these are the type of things I want you guys looking for. See, three triangles under the magenta lines, close to the red lines. It can't get no better than this. Other than the win afterwards. With this setup, it can't get no better than that. Be looking for the next candle for an entry. Waiting patiently. Okay, here we go. This one I'm gonna start paying attention, setting up, really trying to get the best entry if it comes back right here. Watching the clock. Now we got a GBB signal, so I'll still be ready. Then again, I won't. Look where it's at. So I'm not even gonna pay that trade no mind. See that? These are the kind of trades I want you guys to stay away from. Pre-signal alert is still strong. This is gonna be the one. Watch. Look at it. It's fighting. Let's go get ready again. I still feel strong about it. USD JPY, USD JPY, getting ready. Still watching. So while we wait for a signal, let's recap. Okay. So in most cases, we want to follow the trend. You know, these are trending signals, so you want to follow the trend. So the strongest signals are going to be, if it's going down, puts. If it's going up, calls. Okay. So if it's going up, it's going to be best to take trades going up. If it's going down, it's going to be best to take trades going down. Simple enough. Right? All right. Second, right here, your Bollinger Bands. Trade should be touching or breaking through the magenta lines. These are strong probability trades. That's a strong trade. That's strong. This is strong. This is strong. So those are strong probability trades once they're deep in there. If they're right here in the middle somewhere, don't take them. If they got these little dojis, little things going on, don't take them. We're looking for real candles, things like this. Go down, up, down, up. So stay within the magenta lines as far as when you're taking your trades. Also, the red bands. Anytime prices touch the red bands, like look, prices touch this red band, chances is the next candle is going to be going down. So let's watch it. So it's 46 seconds in, so it's not too much time. Let's watch to see what happens. Even if it breaks through, then what's going to probably happen is probably going to form a wick and then start waking its way down. But more times than not, it touches and it will come down. So if you get a signal in that area, see what happened? It came down. So if you get a signal in that area, then you know that price is going to come down. That's a good trade to take. Same thing over here. If it comes up and it touches, look where price went after that, way up here. So price was good after that up here. Now look, see it can repaint, so it can retract itself. So it doesn't mean just because it touched that it won't come back up. But again, more times than not, it will come down. You see where it's ending at. That was just the market maker getting their money, but you see where it's about to end at. It's coming down. So these are trades that are higher probability to go in the opposite direction. When you see these, when you see a trade present itself up here, that's why I said sometimes I might have took it after the time when I see it in these areas, because I just know that it should go down or it should go up, like this did, like I said it would. See, went over, came down. All right, this is playing peekaboo. I seen it though, so I'm still gonna set up Euro JPY because it can always come back. Euro JPY for a put. Use proper money risk management. And you notice we crushed that trade at a time when it was not recommended time for trading. Sweet. So you're waiting for the pre-alert. Remember, again, we'll recap. Pre-alert. Then you're looking for confirmation, which is like these triangles. Then you're looking for price to be touching or breaking through the magenta lines. And the only time you want to be going with the trend, preferably, the only time that you don't have to ever worry about going with the trend is if it's breaking through the red. And if it's breaking through the red, then you can go in the opposite direction. Other than that, go with the trend. Simple enough. Don't take them in here. See, you used to get a signal right up in here. We would pay that no mind. We're looking for signals that present themselves outside of the magenta lines. So we got pre-signal. Ooh, this is nice. So that's what we're looking for. Something like that. AUDJPY set up for it. But it's got everything we was looking for when we were just talking about it. So it's deep up past the red line. It got the triangle, you know, the green touch. You see the blue ready to come back down. We about to be well into the next candle. I'm going to set up so I get a good entry rate. See, I knew it. So it was already dropping. That's why I said I wanted to get a good entry rate, because I knew even without it being 20 seconds into the candle, it was still going to be dropping already because it was already past the red. Got another pre-signal alert. Here we go. And I got in early too, so I would have been one of the ones that took it right away. So I would have been one of the early ones. Anybody else, if it keeps on going down, you guys would have been one of the later ones. You guys would have probably had an even better rate. There you go. So that's two winners. Two winners, guys, right there, back to back. Here go another pre-signal. USD JPY. USD JPY for the put. Like everything to be transparent, win, lose, or draw. So if we got an opportunity to take another one, let's take another one. So far, that's 2-0 at a not recommended time for trading. I did it all live again, as always. Here we go, getting ready for put pre-signal, and we already got a triangle. We're touching magenta lines. I'm comfortable with this trade. It looks good so far. Let's see what it do. I'll get ready just in case. So give me a nice strike rate. Okay. So we're past 20 seconds. But we're still getting pre-signals. Now we got two arrows. There it goes. Look at past the 21-second mark. So I'm not taking it. Not taking it. And this is what we mean by following the rules. Look. Already, if I would have took it, it was at 39. It was already at 39 at the time. So right now we would still be in. I would still be in right now. I would still be in. I would still be going. Green, not too green though, so it might have still been a winner. Still would have been a winner so far. Still would have been a winner. Yep. So that would have been a winner. Even breaking the rules. That would have been a big winner actually. Look. 38. Bam, right there. That's a full minute. And that's a big winner. So that would have been 3-1. breaking all rules, to be honest with you, because it's not even recommended time. It's not recommended time for trading right now. So that was actually a good session. So I'm gonna close now because I don't want this video to be too long. Hopefully this answer everybody's questions. They just see me take 2 trades and could have took one that would have broke the rules. That one would have won too. We both see right here real time. So that would have been 3-0, 2-0 following the rules, 3-0 breaking the rules. So guys, you still won't win every one. Here go another pre-signal AUD, JPY. We'll set up if it sets up before I finish. Guys, you won't win every single trade. You know, this thing gets addictive and, you know, you win so much, you start thinking it's the holy grail and thinking you can't lose. So when you finally do lose, people be like, what did I do wrong? Or why did I lose? Well, it's because you can't win them all. So you're going to lose some, you know, but just brush it off, practice proper risk money management and go on to the next trade. Let's see if this AUDJPY comes in on this next signal right here because it's pretty deep up in there in magenta. If not, then we're gonna close this out. And we're gonna close it out. Okay. So thank you again for trading with us. Thank you for being a part of the BTS family. If you're not already a part of the family, then come see what we're about. You see the videos, you hear the hype, you hear people talking. You know, it ain't just hype, it's real. So come through. God bless. Have a good one.